Digital banking and fintech. Digital banking and fintech are among the most transformative forces reshaping the global financial landscape, driving fundamental changes in how financial services are offered, accessed, and experienced. In today's interconnected world, technology has transcended its traditional role and emerged as the primary catalyst for innovation in finance. Over the past decade, the fusion of technology and banking has not only enhanced convenience and efficiency, but has also redefined consumer expectations by providing seamless, on-demand access to a myriad of financial products and services. Digital banking platforms now enable customers to open accounts, transfer funds, invest, and even apply for credit entirely online, bypassing legacy processes that once necessitated visits to physical branches. This revolution is built on robust technological foundations such as mobile connectivity, cloud computing, big data analytics, artificial intelligence, and secure, encrypted networks that work in unison to deliver services that are both personalized and scalable. The evolution from traditional to digital banking is rooted in fundamental shifts in consumer behavior and technological progress. In the past, banking was synonymous with cumbersome paperwork, long queues, and limited access to financial services. The proliferation of the internet and smartphones has propelled banks to rethink and reinvent themselves. Modern financial institutions now recognize that delivering value to customers means providing services where and when they are needed. This imperative has led to the rapid adoption of technologies like biometric authentication, real-time payment processing, and intuitive mobile applications that streamline the user experience. By harnessing data from every digital interaction, banks can now anticipate customer needs and personalize their offerings, transforming financial services from a one-size-fits-all approach into a finely tuned system that adapts to individual financial behaviors. Simultaneously, fintech startups have emerged as agile challengers to established banks by leveraging advanced technologies to fill gaps in the market. These companies are driven by the conviction that innovation need not be constrained by decades-old infrastructure or regulatory legacies. Fintech has introduced alternatives to traditional lending through digital credit scoring models that rely on non-traditional data sources, such as mobile usage patterns or social media behavior, to evaluate creditworthiness. They have also disrupted the payment industry by pioneering digital wallets, peer-to-peer transfer systems, and blockchain-based payment networks that offer speed, transparency, and lower transaction fees compared to conventional methods. With nimble business models and a laser focus on customer experience, fintech innovators are not simply imitating established practices, they are redefining the very nature of financial interaction in our digital era. The integration of mobile technology is perhaps one of the most significant drivers behind the digital banking revolution. Smartphones have become the primary computing device for billions of people worldwide. With nearly constant connectivity, these devices serve as a gateway to financial services that were previously restricted to desktop computers or physical bank locations. Mobile apps now provide a comprehensive suite of services, from tracking daily expenses and setting savings goals to executing complex investment strategies, all from the palm of one's hand. This ubiquity of mobile devices has democratized access to financial services, empowering even the most traditionally underserved populations with the tools needed to manage their finances effectively. As a result, digital banking is increasingly instrumental in promoting financial inclusion, enabling millions who were once outside the remit of formal financial systems to participate in the global economy. Underpinning these innovations is a heavy reliance on data analytics, which has emerged as the lifeblood of digital banking and fintech applications. Vast amounts of consumer data are captured during every transaction and digital interaction. Advanced analytics and machine learning algorithms process this information to uncover consumer behavior patterns, predict future trends, and identify potential risks. These insights allow banks and fintech companies to offer hyper-personalized services, from tailored product recommendations to dynamic pricing models on loans and insurance. Moreover, through predictive analytics, financial institutions can preempt fraudulent activities and detect anomalies in real time, thus reinforcing the security and reliability of their digital ecosystems. The strategic use of data not only enhances customer satisfaction but also optimizes operational performance, streamlining processes that once involved significant manual intervention. Security remains a paramount concern as digital banking and fintech continue to evolve. As more transactions and sensitive financial data are transmitted online, the risk of cyber threats escalates. To combat these risks, the industry has embraced state-of-the-art security measures, including multi-factor authentication, end-to-end encryption, and continuous monitoring for suspicious activity. Regulatory bodies and financial institutions have also collaborated to establish stringent compliance frameworks and cybersecurity protocols that safeguard consumer data and bolster trust in digital platforms. Enhanced security measures are critical not just for preventing breaches, but also for ensuring that customers feel confident in adopting digital solutions for managing their finances. As cyber threats become more sophisticated, the ongoing evolution of digital security practices remains an indispensable part of maintaining the integrity and reliability of the financial ecosystem. Blockchain technology plays an equally revolutionary role in driving innovation across digital banking and fintech. This technology offers a decentralized, tamper-proof ledger system that enables the secure recording of transactions without the need for centralized intermediaries. The implications of blockchain are profound. It facilitates faster cross-border payments, reduces operational costs by eliminating middlemen, and ensures that transactions are traceable and immutable. Innovators have leveraged blockchain to create digital currencies, smart contracts, and decentralized finance (DeFi) ecosystems, all of which are redefining conventional financial operations. For example, smart contracts, self-executing contracts stored on a blockchain, automate complex financial transactions, ensuring that contractual terms are met without the need for third-party verification. This technological synergy not only promises greater efficiency and lower costs, but also heralds a more transparent and democratized system where trust is derived from cryptographic security rather than institutional authority. The rise of open banking further exemplifies the transformative potential of digital banking. Open banking initiatives allow third-party providers to securely access bank data through standardized application programming interfaces, APIs, thereby fostering an environment of innovation and competition. By breaking down the silos that once separated traditional banking services, open banking paves the way for innovative apps and platforms that integrate various financial products and services into a seamless user experience. Consumers can now manage everything from budget tracking to complex investment portfolios within a single ecosystem, enjoying the benefits of enhanced interoperability and greater control over their data. This collaborative approach not only drives the creation of more personalized and efficient financial services, but also holds the promise of building a financial ecosystem that responds dynamically to changing consumer preferences. Digital lending exemplifies another area where fintech has dramatically altered what was once a conservative approach to credit. Leveraging alternative data sources and sophisticated algorithms, digital lending platforms can make faster and more accurate credit assessments than traditional methods reliant on historical credit bureau data. This innovation opens the door for millions of consumers, particularly those with limited or no credit history, to access affordable credit facilities. Through online applications and automated decision-making processes, digital lending providers are able to reduce processing times from weeks to mere minutes, vastly improving the customer experience and fueling economic activity. This shift towards digital lending is not only increasing financial inclusion but also enabling businesses to access capital more swiftly, thereby supporting entrepreneurial ventures and contributing to broader economic growth. Customer empowerment is a central tenet of the digital banking and fintech revolution. By providing tools that enable individuals to manage every aspect of their financial lives on digital platforms, these innovations have shifted the power balance away from traditional gatekeepers toward the consumer. Modern digital banking services offer real-time insights into spending habits, automatic transaction categorization, and visual analytics that enable users to make informed decisions about saving, borrowing, and investing. The ability to set personalized financial goals and track progress using digital dashboards creates an empowered, self-directed customer who is no longer reliant on bank representatives for financial planning. This transformation is particularly important in an era where consumers expect instantaneous, data-driven insights and the flexibility to tailor financial solutions to their unique circumstances. Fintech is also redefining the way investment and wealth management services are delivered, making them more accessible to a broader audience. Robo-advisors utilize algorithms to manage investment portfolios based on individual risk tolerances and financial goals, democratizing access to high-quality investment advice that was once exclusive to wealthy clients. These automated platforms allow investors to benefit from diversified portfolios, low fees, and continuous rebalancing without the need for a personal financial advisor. As a result, even individuals with modest investment amounts can participate in wealth creation and asset management previously reserved for a select few. The simplification of the investment process through digital platforms is contributing to a more inclusive financial environment where technological innovation aligns with the goal of broader economic participation. The transformative power of digital banking extends to the realm of international payments and remittances. Traditional cross-border transactions have long been marked by high fees, slow processing times, and limited transparency. Digital banking solutions, however, capitalize on technologies such as blockchain and global payment networks to streamline these processes significantly. Customers can now send and receive money across borders quickly and at a fraction of the cost associated with traditional banking channels. This capability not only benefits individual consumers but also has far-reaching implications for global trade and international business, as companies are able to manage cash flows and settle transactions in real time regardless of geographical boundaries. The resulting efficiencies are essential for promoting economic integration and supporting emerging markets that benefit from reduced financial friction. Interoperability is another key area where advancements in digital banking and fintech are generating substantial value. The ability of various financial systems to work together seamlessly creates a more efficient environment for both consumers and businesses. Through the implementation of standard protocols, innovative technology platforms can integrate banking services with non-financial applications, enabling a level of connectivity that enhances overall market efficiency. For instance, digital banking APIs can interface directly with e-commerce platforms, providing real-time payment solutions that improve customer satisfaction and drive sales. This level of technical integration not only enhances convenience but also fosters innovation by creating an ecosystem where new financial products can be developed and deployed rapidly in response to evolving market needs. While the rapid expansion of digital banking and fintech presents numerous opportunities, it also brings challenges that need to be addressed to ensure sustainable growth. Regulatory uncertainty remains a significant obstacle, as the pace of technological innovation often outstrips the development of comprehensive legal frameworks. Different jurisdictions have adopted varying approaches to digital banking and fintech regulation, which can create a fragmented operational environment for companies that operate across borders. To address these challenges, industry stakeholders, regulators, and technology providers are collaborating to establish standards and frameworks that balance the need for innovation with consumer protection, data privacy, and overall financial stability. Another critical challenge lies in the area of cybersecurity. As digital banking platforms become increasingly complex and interconnected, they face sophisticated cyber threats that require constant vigilance and advanced defense mechanisms. The growth of digital ecosystems has necessitated the development of new security paradigms, including real-time threat detection systems, behavioral analytics, and robust authentication processes that protect user data and maintain system integrity. Cybersecurity is not merely a technical concern. It is pivotal to maintaining customer trust and ensuring the long-term viability of digital financial services. The continued investment in cybersecurity technologies and practices is vital for preventing breaches, mitigating risks, and upholding the confidence that customers place in digital banking and fintech platforms. The global nature of digital banking and fintech also drives the need for scalability and resiliency in technological infrastructure. As more customers migrate to digital platforms, financial institutions must invest heavily in systems that can handle immense volumes of transactions while reducing latency and ensuring uninterrupted service. Advances in cloud computing and distributed ledger technologies are instrumental in meeting these demands, enabling platforms to scale dynamically and maintain high levels of performance even under peak demand. Scalability also plays a crucial role in supporting innovation, as it allows fintech startups and banks to introduce new features and services rapidly without being constrained by physical infrastructure limitations. The convergence of technology, finance, and consumer behavior heralds a future in which the boundaries between traditional financial institutions and fintech innovators continue to blur. Established banks are actively collaborating with or acquiring fintech startups to harness innovative technologies that enhance their operations and competitive positioning. This symbiotic relationship is fostering a dynamic environment where legacy institutions benefit from the agility and innovative spirit of fintech, while fintech companies gain access to broader market reach and established regulatory expertise. Such collaborations are jointly spearheading initiatives that not only streamline processes and reduce costs, but also enhance the overall quality of financial services available to consumers around the world. As emerging technologies such as artificial intelligence, blockchain, and open banking continue to evolve, the digital banking and fintech sectors are poised for further expansion and disruption. The ongoing integration of these cutting-edge innovations is set to create a more interconnected, resilient, and customer-centric financial ecosystem. The drive toward continuous improvement is evident in every aspect of digital banking, from the development of smarter customer service chatbots to the creation of intricate algorithms that power tailored investment strategies. In this rapidly evolving landscape, The potential for endless innovation is matched only by the imperative to safeguard consumer interests and maintain a stable, secure financial system. In essence, the rise of digital banking and fintech is not merely a transient trend but a profound transformation that touches every facet of economic life. By streamlining traditional processes, enhancing transparency, and democratizing access to financial services, digital banking is redefining what it means to engage with money in the modern world. Fintech innovations are challenging conventional wisdom by introducing entirely new ways of managing risk, distributing capital, and connecting consumers with financial opportunities. Whether through mobile applications that empower users to monitor their finances in real time or digital lending platforms that extend credit to historically underserved markets, the impact of these technologies is both deep and far-reaching. The continued evolution of digital banking and fintech promises to accelerate the pace of economic change and redefine the relationship between consumers, businesses, and financial institutions. As traditional banks modernize their operations and fintech innovators push the boundaries of what is possible, the financial landscape will increasingly reflect a blend of efficiency, personalization, and transparency. This transformation, driven by a relentless pursuit of better technology and improved user experiences, is laying the foundation for a financial future that is more inclusive, robust, and adaptable to the demands of a digital society. Ultimately, the digital transformation in banking and finance represents more than a technological shift. It is a fundamental change in how economic value is created, shared, and sustained. By integrating advanced technologies into every aspect of financial services, digital banking and fintech are redefining trust, enhancing security, and democratizing access to essential services. The evolution of these sectors is a testament to the power of innovation in solving complex challenges and building a more connected, efficient, and equitable global economy. As the journey continues, the collaboration between technology, finance, and regulatory frameworks will determine how this new financial ecosystem evolves, ensuring that it not only meets the economic needs of today but also anticipates the challenges and opportunities of tomorrow.